Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we talk about the latest trends of the stock markets, also help you understand the stocks and the sectors that are most active in trade today. We'll help you understand expert views as to how to approach the markets and several of the stocks that are buzzing in trade in today's trading action as well. But first up, a quick check of the stock markets right now. Well, we've started off on a somber note this new week, 61,137, 525 points gone on the Sensex right now. It is trading near the low point of the day, 153 points gone for the Nifty as well, 18,154 the current level. That's also down by 0.8%. So that's the kind of decline that you're seeing. The Nifty Bank slightly lower than the benchmark in comparison with the benchmark indices. It's down about 0.4 odd percent. So the Nifty Bank is also contributing to the losses. But in terms of the sectors in today's trading action, we are seeing a mixed reaction. Only the stocks, say, in the PSU banking space, that's still holding up in trade today. But rest of the sectors are actually still seeing some pressure on the stock markets. In fact, if you see, the maximum decline is coming in from the IT stocks today. That's down by over 1%. The realty stocks that are also down by over 1% in today's trading action. Metals, pharma, FMCG, even the autos and the financial services are dragging a lot in trade today. Even when you talk about the advanced decline ratio, 40 stocks of the 50 stocks in the Nifty are in the red right here. About 8 odd stocks are seen advancing at the moment. As far as the top losers of the trade today are concerned, on the Nifty index, you will see SBI Life dragging about 2%, JSW Steel, TCS, Hero MotoCorp and Bajaj Finance. Those are the stocks that are dragging in trade today. So you have a bunch of auto majors, you have a bunch of top IT companies and the financial services names as well that are down in trade. And of course, some of those metal pack as well. There's big news development from over the weekend that is impacting some of the stocks right here. Reliance Industries down by 1.5%. So that heavyweight stock is also putting some pressure on the markets. In terms of the broader markets, we're seeing a mixed reaction here. The small cap stocks are in fact in the green today, while slight losses in the mid cap space, but they're definitely outperforming the benchmarks in an otherwise overall weak sentiment that you're seeing. The India VIX has moved up by over 3%, 14.8 levels is what you can see. Let's welcome our guest for today. Mr. Kranti Batini joins in from WealthMills Securities to share his view on the markets. Welcome, sir, and thank you so much for taking the time out. Well, another week has started on a somber note. Your thoughts on the markets. First up, what are the key reasons why the Sensex has dropped over 500 points today? Is that a concerning point? Is the market rally somehow dwindling pace, or do you see a recovery from these low levels?
So actually, what we observe in the market is currently markets are in a consolidation phase right now. Okay, as long as Nifty is holding 18,100 levels, okay, nothing to worry about the markets. We can see some kind of follow-on buying might come in the market at some point of time. Right now, investors are varying right now. Looking at the global factors, they are creating some kind of pressure on the market, but markets are in a consolidation phase right now. And one thing we need to ponder upon right now, Sakshi, foreign portfolio investors who have been the net sellers earlier, okay, right now they turn positive towards Indian markets. And so far, in the month of November itself, they invested around 30,000 crores. It's a big sum comparatively in the current figures are concerned. So
Yes.
some kind of value buying is happening right now in the market, but
Okay.
nothing to worry. Just a small blip right now, and markets are in a consolidation phase right now.
Okay, so the markets are in consolidation phase. You must not be worried with these kind of dips because these are just minor cuts and the markets are well on the course to move up higher. Right now, you're only seeing some consolidation taking place. Let's move our attention to the two stocks that I've listed in the markets today. The two new debutants, we'll talk about both of them. First one is 5-Star Business Finance, the company from the microfinance business. It focuses a whole lot of providing loans to women in the rural areas as well. Mr. Batini, we did talk about this IPO when it was in the works. There has been kind of, a subdued listing right here, but the stock is doing well at this point in time. Your thoughts on 5-Star Business Finance? As an IPO, I remember you had suggested that, the space looks overcrowded at this point in time. There could be some further challenges for the company to create a niche for itself and to stand out among the rest of the companies too. After the kind of listing that we have seen, your thoughts on the company?
Yeah, Sakshi, earlier in our show about discussion about IPOs, we have discussed and educated the investors just to uh, wait for this IPO because the space looks overcrowded. Right now, we can see some kind of buying interest that's emerging
Yes.
with respect to the five-star business is concerned. But I educate the investors who got the IPO allotment. Okay, they can book profit at this point of time because the space looks overcrowded and the valuations also a little bit stretched for this stock. So any uptick in the stock, okay, they can the investors can use to exit in the stock.
Okay, let's talk about the other company that has made its debut, Archean Chemical Industries. That made about a premium listing of over 10 to 11% odd on both the stock exchanges today. Strong listing in this space as well. Your thoughts post the listing? What would you really advise the IPO allotment investors who've got this allotment? What should they do? And for all the investors who may be looking at a fresh opportunity, is this space interesting and is Archean Chemicals a good pick for the long term too?
Archean Chemicals looks a better space when in the recent IPOs, Sakshi. They are into marine chemicals, industrial salt. These are the specialized chemicals. Looks promising. Uh, as the industrial space looks promising right now for the investors, I educate the investors to hold on to this stock and wait for the next couple of quarters how the results are going to be panned out. And for the existing investors, they can hold on to the stock and for the people who are want to enter into these kind of stocks, okay, wait for a couple of days time how the things get pan out in the counter, how the institutional buying interest will be coming in this counter. I advocate the investors to just hold on to the stock. For the freshers, just wait for a couple of days time. Probably they can enter at a later stage. There is no need to jump and buy immediately right now into this stock.
Okay, so the strategy is right there for all the investors of new listings. If you track these new IPOs and the new listings, right now, if we speak, there's a very smart recovery on five-star business finance that we are witnessing. There was a discount listing of about 2% and 5% on both these indices on the both exchanges. From the issue price, the five-star business finance is right now up about 11.5%, but from the listing price, it's up about 17% because the listing was at a discount. So a sharp move right there. The currently five-star business finance is trading at 528. Talk about Archean Chemicals, that already was up about 10% odd from the issue price at listing. We're seeing about 11.5%, 46 rupees on the upside as far as the jump or the premium is concerned from the issue price. From the listing price, it's up about 2 odd percent. So it continuously is building onto the gains as well. But now you have the strategy. If you're a long-term investor looking at these new stocks, what should you be doing at this point in time? One more space that is in focus today is the metals pack. Now, all of us know that over the weekend, we did get an important news coverage where the government notified the withdrawal of the duties that were imposed in May on the exports of metals and steel as well. So the steel industry has hailed the withdrawal of this export duty. We are although seeing some mixed reaction as far as the metal index and the stocks are concerned. The metal index is still down 0.8% odd. What we know is that as per the Finance Ministry notifications, exports of iron ore lumps and fines with less than 58% ferrous will attract nil export duty now. In case of iron ore lumps and fines with more than 58%, the rate of duty will be 30%. So all of this notification came about. Now, how do you really understand that and what kind of an impact are we seeing on several stocks of metals? Joining in with me is my colleague Tanya Aneja to share with us the update on how does investor read this kind of a news development at this point in time, why the news has come about and what's the impact of this. Tanya, take it away.
Of steel and iron ore products in a massive relief to the sector. Now, experts believe that this rollback is a sentimental booster, but it is unlikely to have a significant impact on steel realizations. And this is because of the fact that the current export prices are at a significant discount to domestic prices due to the deterioration of global steel markets in the last 6 months. They believe that the reduction in export duty on iron ore should allow domestic miners to increase prices given the increase in export parity prices. And also, exports volumes are also expected to pick up given low base. Now, ICICI Securities believes that a significant sector headwind has been removed, and it has in fact raised the valuation multiples of all ferrous stocks under its coverage. It even expects a sector re-rating after this rollback. The brokerage house has raised its target for stocks like Jindal Stainless and NMDC, but has a sell rating on JSW Steel. A few metal stocks were up in the early trade today. However, many of them failed to hold the gains and slipped in the red. Back to you.
Okay, thanks, Tanya, for sharing with us all that update. Mr. Badini, let me come to you to understand your expert take on the move and the notification by the government, and what kind of an impact can it really have on these metal stocks. We did see that some of the stocks have actually shown a very sharp rise, like Jindal Stainless and NMDC, for example. They are in the positive, but the rest of them are in the negative. So how does one really understand, the impact of this in the long run? Can it really have an impact on the earnings in the positive space? Which are the stocks to really track now post this development?
Sakshi, metals in nature, they're cyclical in nature. Just 4 or 5 quarters back, we were discussing about a metal cycle, the metal super cycle that's emerging across the globe, and people were gung-ho about the metal whole industry as concerned. Currently, if you see last 2 quarters performance, metals are showing a subdued performance with a as the global growth is slowing down right now, and also concerns about the European growth and also US recession. These are the prime factors that are impacting the metal prices. The current government notification is just, as Tanya rightly shared, it gives just a small booster in the medium term on the sentiment of the story. But I don't think so it's going to have a real impact with respect to their earnings are concerned. So metal is a story. Investors need to wait. They move in a very long-term cycles. So investors with a very long horizon, time horizon only, they can look into the metal stocks accumulating in their portfolio. Stick to the stocks like Hindalco or Tata Steel, the large caps, for a to build up and use these kind of dips. But we need to wait and watch how the entire story of metals is going to emerge. They are directly linked right now with respect to the global growth is global growth is concerned, as the interest rates have been going up across the globe. So there will be a downtrend for the metals are concerned. And Sakshi, the last couple of days, the news flow has been India has overtaken Japan in terms of the steel production is concerned, and emerged as the second largest steel producer across the globe. So right now, the story is emerging, but investors need to wait and watch. Purely the global growth is going to determine the fundamentals of metals in the coming days.
Okay, understood that. Before I let you go, there's one more stock that is really grabbing my attention at this point in time. Easy Trip Planners, or Ease My Trip. That stock is in focus today. In fact, there is a sharp surge of about 20% on the stock. In fact, the company and the stock is trading ex-dividend and ex-bonus. The company fixed 22nd November as the record date to finalize the eligible beneficiaries for the issue of bonus shares and stock subdivision as well. Now, the board has approved and declared the bonus issue of 3:1 ratio, along with the stock split ratio of 1:2. Mr. Patini, help our all viewers really understand what this really leads to. A stock split and a bonus coming in together. What will this mean for the investors who are holding the stock right now? And should it be an opportunity for new investors to really get into the stock?
So actually, the stock Easy Trip Planners have been buzzing from past couple of months, and the stock has been witnessing a good uptick, and also some kind of speculative activities concerned. But overall, coming to the industry, they're doing extremely good. Travel and tourism is coming back. There is a pent-up demand with respect to the with respect to the demand is concerned. So, and the company has been at a right time. They are announcing the bonus and the split to encourage the investors, or we can say the lure the investors. So the existing investors definitely they can hold on to the stock. This is the stock to watch on because they have been trying to make the company for the investor friendly motives we can see. So
Right.
investors definitely can hold on. The industry is at a right place at a right time right now. Uh, for the investors, or any speculators, they can strictly follow the stop loss with respect to the company is concerned because the company, the stock is in a complete momentum zone right now. The existing ones, they can hold on.
Absolutely. It's not too difficult to really understand the kind of momentum that the stock is building up. We are seeing the winter break coming in, and a lot of people will be looking at traveling, and these kind of companies are already buzzing in trade. Any plans for travel, Mr. Batini, over the weekend or perhaps in the winters?
It's a part because the temperatures have been dropped. This is the right time to take some leave and uh, hit the holiday destinations as market also in a consolidation phase.
Absolutely. Well, we hope that you have a great trading day ahead. Thank you so much for being with us and sharing all the market insights with all our viewers as well. And with that, let's quickly do a check of how the markets are doing at this point in time. Still down in trade, 534 points gone for the Sensex, 61,131. Consolidation clearly, 18,150. For the Nifty right now, it's down about 160 odd points in today's trading session. Still in the declining phase. The Nifty Bank, if you see, slightly lesser than the benchmarks, but the fall is about 0.4%. What's dragging among the constituents of Nifty Bank is clearly the financial services more. But clear outlier, the PSU banks, they continue to run up 1.16% as the lone gainer of the index in today's trading session. Rest of the sectors still down in trade. We'll keep you posted with everything that's buzzing on the stocks and the markets as well, and for that you should stay on with us onto Business Today's platform as well. Don't forget to subscribe to this channel and do stay in touch with all of our social media platforms as well, where we are present. So Facebook, Instagram, Twitter, LinkedIn, you can catch us up there and continue to share with us, engage with us, and let us know what you really think of the stock markets, what do you really want to know, and we shall make some programs for you. Thank you so much for being with us for now.